For the introduction, the study was conducted based on the subject financial management, conducted to study the financial management done by two leading companies in Malaysia, namely Pharma Niaga Berhad and Hartalega. There are several factors taken into account to conduct the study, which consists to ratio analysis, comparative analysis, and graph. The study also conducted to identify the ratio analysis, which refer to analysis of various financial information in the financial statement of a business. Besides that, the study will be conducted carefully to meet the objective of the study, which is to identify ratio analysis, comparative analysis, and graph that cover both companies, namely Pharma Niaga Berhad and Hartalega. Now, for the company background, firstly, we go to the Pharma Niaga Berhad. Pharma Niaga Berhad was established in 1994 as a pharmaceutical. Next, the first healthcare company in Malaysia to be listed on the main market of the Kuala Lumpur Stock Exchange, now known as Bursa Malaysia. Next, the company is also headquarters in Shah Alam Selangor and conduct with their service worldwide. Besides, involved in various segments of the pharmaceutical value chain. Lastly, many complete and best facilities and amenities with more than 3,060 employees from various sectors. Now we go for the Hartalega. Hartalega was founded in 1908, was the largest manufacturer of nitrile glove in the world. Besides, company founded by Kuan Kan Hom, established in 1988, who is the executive chairman. Besides, products by this company have also been exported to more than 14 countries. Next, produce more than 45,000 gloves in an hour. Lastly, especially in the mid-2000s, when hospitals in developed countries like the US and Europe began to shift from rubber gloves to nitrile.
Trend analysis for Pharma Niaga Berhad. The liquidity ratio, the current ratio are same in both years, which is 0.78. The quick ratio increased from 0.26 to 0.28, and the net working capital are negative in both years due to poor management of cash. For activity ratio, total asset turnover is decreased from 1.77 to 1.72. Account receivable turnover is decreased from 10.56 to 9.47. Average collection period increased from 34.57 days to 38.56 days due to the efficiency of collection in 2019. Inventory turnover is increased from 4.56 to 4.64, and fixed asset turnover is decreased from 4.28 to 4.17. For debt ratio, the debt ratio is decreased from 77.58% to 77.54%. Debt to equity ratio is decreased from 813.39% to 799.01%. This result shows that the firm need to monitor its debt closely in both years, and time interest and ratio is increased from negative 4.77 to 1.06. For profitability ratio, the return on equity is increased from negative 1.87% to 7.4%. This shows that the firm is less efficient usage of equity capital. Return on asset is increased from negative 9.39% to 1.66%. The gross profit margin increased from 3.33% to 10.83%. Operating profit margin increased from negative 6.8% to 1.31%. and net profit margin is increased from negative 5.3% to 0.96%. This shows that the firm is not efficient at converting its sales into actual profit.
Next, we will look at trend analysis Harta Lega Holdings Berhad for 2019 and 2020. First was a liquidity ratio, which is current ratio, increased from 2.18 to 2.67, while quick ratio increased from 1.51 to 2, and net working capital increased from 485,553,013 ringgit to 681,482,251 ringgit. Next, we will look to the activity ratio. There are 5 types of activity ratio that we can see here, which is total asset turnover decreased from 0.94 to 0.88. It is because the firm is not used the asset efficiently. Next, we will look at account receivable turnover. It is decreased from 6.17 to 5.82. It is because firm collect their receivable more in 2019 compared in 2020. Next is average collection period. It was increased from 59.16 days to 62.66 days. It is because the account are often overdue. Next is inventory turnover. It is increased from 10.26 to 10.68. It is because the firm able to sold the goods quickly in 2020 as well. Lastly, fixed asset turnover, which is it decreased from 1.35 to 1.31. The firm uses its asset efficiently in 2019 more than in 2020. Next, we will look at debt ratio, which is there is 3 type of debt ratio. First is debt ratio, which is decreased from 24.49% to 23.33%. It is because the firm is able to pay off its liability better in 2020 compared to 2019. Next is debt to equity ratio. It also decreased from 52.31% to 51.06% as well. It shows that the investment is less risk in both years. And lastly, time interest earned ratio. It also decreased from 51.87 to 51.47. It shows that the firm is able to service its interest expense obligations as well. Next, we will look to the last part of trend analysis for Harta Lega Holdings Berhad, which is profitability ratio. So there are 5. First is return on equity, decreased from 20.14% to 17.08%. It is because the firm uses the equity capital efficiently in 2019 compared to 2020 as well. Next, return on asset. It also decreased from 15.2% to 13.11% because it shows that firms use its assets efficiently in 2019 compared to 2020. Next, gross profit margin. It was increased from 25.05% to 25.36%, and it shows the good result, which is the firm manage the cost of sale well in both of years. Next is operating profit margin. It all shows decrease from 19.86% to 19.36%. But it still can control its cost and expenses efficiently in both years. Lastly, net profit margin, decreased from 16.09% to 14.85%. This firm convert its sales into actual profit efficiently in 2019 compared to 2020.
As seen in liquidity ratio, Pharma Niaga is much lesser than Harta Lega. In activity ratio, Pharma Niaga is much bigger than Harta Lega in the total assets turnover, account receivable turnover, and fixed assets turnover. Meanwhile, Harta Lega is much bigger than Pharma Niaga in the average collection period and inventory turnover. As of the debt ratio section, Pharma Niaga has a bigger ratio for debt ratio and debt to equity ratio than Harta Lega, and Harta Lega has a bigger time interest earned ratio than Pharma Niaga. For profitability ratio, for all the elements, Pharma Niaga has a much lesser number than Harta Lega.
We'll be looking at comparative analysis between Pharma Niaga Berhad and Harta Lega Holdings Berhad for 2020. First one, liquidity ratio. Current ratio, Pharma Niaga 0.78, smaller than Harta Lega, which is 2.67. Quick ratio, Pharma Niaga 0.28, smaller than Harta Lega, which is 2.0. Net working capital, Pharma Niaga negative Rm 267,575,000, less than Harta Lega, which is Rm 681,482,251. Next, activity ratio. Total asset turnover, Pharma Niaga 1.72, bigger than Harta Lega, which is 0.88. Account receivable turnover, Pharma Niaga 9.47, larger than Harta Lega, which is 5.82. Average collection period, Pharma Niaga 38.56 days, less than Harta Lega, which is 62.66 days. Inventory turnover, Pharma Niaga 4.64, less than Harta Lega, which is 10.68. Fixed asset turnover, Pharma Niaga 4.17, more than Harta Lega, which is 1.31. Next, debt ratio. Debt ratio, Pharma Niaga 77.54%, more than Harta Lega, which is 23.33%. Debt to equity ratio, Pharma Niaga 799.01%, more than Harta Lega, 51.06%. Time interest earn ratio, Pharmaniaga 1.06, smaller than Hartalega, which is 51.47. Lastly, profitability ratio, return on equity, Pharmaniaga 7.4%, smaller than Hartalega, which is 17.08%. Return on asset, Pharmaniaga 1.66%, smaller than Hartalega, which is 13.11%. Gross profit margin, Pharmaniaga 10.83%, less than Hartalega, which is 25.36%. Operating profit margin, Pharmaniaga 1.31%, less than Hartalega, which is 19.36%. Net profit margin, Pharmaniaga 0.96%, less than Hartalega, which is 14.85%.
Pharmaniaga Berhad is one of the largest integrated local healthcare companies in Malaysia, and Hartalega is the world's largest nitrile glove producer, manufacturing 14 billion gloves annually. The impact of performance to the company, Pharmaniaga is committed to continuing to provide the highest standard of service to enable the Ministry of Health focus on healthcare delivery. And for Hartalega company has continued to increase since the WHO considers COVID to be a dangerous pandemic to population around the world.